the Fed can create opportunities for people to overreact or take on opportunities that the market has not provided yet. So you're saying, let the market figure out on their own.
And I understand people are scared of things crashing, but you can't rise forever. Like there's going to be.
Welcome back to Decode Econ, where we talk about the economy, what's happening in it, but most importantly, what that means to you. My name is Dr. Abdullah Bahrani, professor of economics and the founder of Decode Econ, and associate dean here at the Hale College of Business. Today, I have Jack Marx with us, who's going to be, he's got some really good questions, and one of them, I think we totally disagree on the answer. So you want to listen in on my take and his take. But if you're new here, you haven't been here before, make sure to like, subscribe, leave a comment, tell us what you loved about today's podcast. Jack, how are you doing today?
I'm doing great. It's been a minute.
It's been a minute. You're about to start law school. Today is Jack's last day at Decode Econ.
Yeah, that's true.
All right, we got to go party next week.
Yeah.
Send you off because we're not going to see you for a year. I hear law school takes up every second of your life.
That's what they say. Full-time job and more.
Well, anytime you need to have a dialogue, to have a conversation, you know you're welcome to join us here at Decode Econ.
I'll be around.
All right. Jack, what we got today? What's going on in the economy?
We're going to talk about Kevin Warsh. That's where we're going to start. Your favorite person, Kevin Warsh. You're skeptical of Kevin Warsh.
I was not. So it was a couple of months ago, I think in May, we talked about how great of a job he was doing. And I remember in that podcast, I said, he's doing a really good job, but he's got time to disappoint me. And sure enough, he's been disappointing me.
Well, I think my problem is when we talked about that, we both kind of were interested in the idea of less forward guidance. And he's following through on it now. So
I was never about...
You were curious.
I was curious about the topic, but I am such a big believer in the importance of information.
Yeah.
And I believe more information is better.
So is it the Fed's information that's important, or is it the economy's information that's important?
So you bring up a really good question. For the audience that is listening in and is wondering what future guidance means, the Federal Reserve at the end of their meetings usually sends a signal of what they might do in the future. And I think this is where the market is split, where you and I are split.
That's true.
Right? So I think it's important to put our biases on the table, or our assumptions, as we say in economics. My assumption is the Fed wants to do good for the economy, right? And I'm not saying that's not your assumption, but I will say that there's some people that believe that the Fed can overheat or slow down the economy by their actions.
True.
Right? And I think there's an element of truth there, but I don't think it comes from providing more information, right? So if the chairperson of the Federal Reserve goes in and says, hey, looking down, 3 months, 6 months, I expect the economy, inflation to be above or below our expectation. That tells me, based on their full information, they're sending a signal of what might happen. You're telling me that signal is not needed. How would you process it?
So my whole thing is the idea is with forward guidance is to put all these big bankers, these big economic these shakers.
Yeah.
Give them an opportunity to go back and look at the organic economic conditions and do it themselves, and not just the Fed's. Like, it's to get rid of this echo chamber.
Okay.
Whatever the Fed says, okay, we're going to follow that. We're going to price out these loans they're giving out, whatever they're doing, these big banks. And I understand that banks operate in really thin profit margins, but I mean, throughout history, we know that bankers are willing to take risks they probably shouldn't take.
Okay.
So if we give them more incentive, we get rid of that moral hazard, the put. We talked about the put, the Greenspan put, and now they call it the Fed put. That's my worry. Is I think people are too worried about this echo chamber instead of letting the market do its thing and let it be organic.
Jack, I really love this because you are pushing back over here in a way that is allowing me to see a different lens. And this lens that I'm understanding from you is the Fed can create opportunities for people to overreact or take on opportunities that the market has not provided yet.
Yep.
So you're saying, let the market figure out on their own.
And I understand people are scared of things crashing, but you can't rise forever. Like, there's going to be setbacks.
Okay. So, and I think this is where our disagreement and our our perceptions are. My perception is the Fed is informed and the Fed will give us better information. So I would be better equipped of making long-term decisions if I know how the decision makers see the economy. Now, let's take the Federal Reserve completely out.
Okay.
Right? Because that's the extreme side of it.
Yeah.
So if we remove the Federal Reserve from managing the stability of the economy, what happens?
What happens?
Yeah, because now it's totally market driven.
Well, then all these firms, they would have to start by finding new indicators.
New indicators, new information.
Yes.
And it increases the cost of acquiring information and increases the cost or the frictions and the uncertainties around information. So to me, as long as the Fed is providing more clearance in the data, then it works.
Okay.
However, if the Fed is sending hidden messages, which I think some people truly believe that the Federal Reserve is doing that, right? And therefore allows some people to take advantage of that opportunity or not. So it's really a premise on, does the Federal Reserve act in the best actions and the best intentions for the U.S. economy? That's what it comes down to. Am I reading it wrong?
That's not crazy to say, like, because the idea is the Fed really benefiting people? And that's like where people on my side, they're skeptical of the Fed doing that and
Yes.
that it's doing it right, which is why I think you have people on this capitalist, pro-capitalist side, like super pro-capitalist side, who are like, well, giving the control back to the market would in turn benefit the market.
Yeah, it's a very libertarian approach.
Yeah, it is. Yeah.
Right? Let people make the decisions that they make, and I 90% of the time believe in that. The places where I struggle is I don't think information is publicly and readily available, right? So to me, that's where the Fed is coming in to increase and improve access to information.
Yeah.
It's the same problem I have with providing preferential treatment to President Trump's announcements on Truth Social.
Yeah, of course.
It limits who has information and who doesn't, right? So I think you and I are making we have the same views. The difference is, do we believe information is readily available and accessible?
Yeah, and it's a good question. And obviously, like, if we were to continue with forward guidance and things did change for the better, would you think that in the future you could have these firms like publishing their own data that they have to release, or do you think it stays hidden?
No, you're 100% correct. So the assumption, and this is really part of this movement, let the private markets solve public issues, right?
Yeah.
And data is a really good example. Data is a public good from my perception. No firm is going to make information available to others that it could use to benefit itself.
Right.
So which public firm is going to come out and provide information on where the economy is going out of its own goodwill? And until I see a firm actually stepping in, I assume that's the role of government, or in this case, the Federal Reserve. That's why I think we need to fund the BLS, we need to fund census, because no private firm otherwise would.
No, I would completely agree that the information needs to be available. And I think that's the question here is, so what we know, do we not know what indicators the Fed look at?
That's the problem that I have right now is Warsh is complicating that.
But
right?
Is there not like a very broad and basic set of indicators that we know the Fed uses?
Today, I don't know what the Fed uses.
Okay.
And, I'll give a shout out to Claudia Sam. She was on Marketplace last week. She is actually not as concerned about the forward guidance as much as she is concerned about what is the data that's going to make a decision, right?
Right.
So today, my biggest issue with the Federal Reserve is I don't know what they're evaluating. Right? What signals should we be looking for an increase in interest rates? So now it creates opportunities for different people to utilize different data sets.
Right.
And to me, that's where more volatility comes in, because we don't have a guidance, if you may.
Yeah. And I mean, the goal of the Fed is to stabilize macroeconomic conditions, correct?
That's what I think. Some people disagree. Some people believe that it actually creates bigger swings, right?
I mean, you could say that, obviously, depending on how long they hold
We never
rates.
know the counterfactual.
I mean, they do control interest rates, which control a lot of the economy.
Let me ask you this. So yesterday, there was this rumor that Warsh is going to move from 8 meetings a year to 6 meetings.
Yeah.
What's your stance on that?
So my question is how much of those 2 meetings impact the swing of things?
Yeah.
Because throughout history, like if we go back and see how big of a change happens between each meeting, is it really as big of a deal as you think? Like, I don't know. I'd have to look back at that historically.
Yeah, that's a good question. My concern with it is that's 2 less meetings for the Federal Reserve to react.
Yeah, but I think it gives more time for the market to figure it out.
Yeah. You love markets, don't you?
Well, I think, I don't think central control is a good thing. I think competition's good. I think when one branch or one body controls interest rates, I think that could be a problem.
I'm a big market person, and I think you beat me out.
I just think, I think it gets skeptical. I'm skeptical of one body of power. That's all it is.
And I respect that. The thing that I love about what you just said, Jack, is you know what you stand for, regardless of what entity we're talking about.
Yeah.
If control becomes too concentrated, it raises your concerns.
And let's not act like I'm not skeptical of massive banks either. So
yeah. You're just a skeptical guy.
I just hate really strong people.
Okay.
Just kidding. I don't hate anybody.
So you like the
competition's good.
The separation and democracy and the distribution of power across the economy. Sure. Perfect. I think we agree. For me, the pain point is on information, not necessarily power, but I don't think access to information is evenly distributed in this economy.
So from a policy standpoint, you're a publicly traded company, and you're handling things like, loans, mortgages. Mm-hmm. Say information is supposed to be made public.
Yes.
What is your opinion on what the Fed's doing then? If like JP Morgan or Chase, is that the same thing? Isn't Chase JP Morgan?
Yes.
Oh, that's dumb. Say they have to publish their data.
Yes. So, and we actually wrote about this, I think, about a year ago right now, when they were talking about changing the accounting responsibilities from reporting quarterly for publicly traded firms to reporting twice a year. I was totally against it. All my accounting friends were like, no, this is actually really good because the cost associated with reporting is so high. Also, firms play the game of making their numbers look pretty every quarter, and this reduces the possibility of timing the market.
Yeah.
At that point until today, I believe that more information is better, and the stance that I took then is if we don't have that publicly available data, people will have to rely on reading tea leaves.
Yeah, right? You should do it.
Everybody's going to have to
start guessing,
and I don't like people guessing on economic decisions.
For sure.
Yeah. Cool. All right. So we got in our first Warsh fight.
Yeah.
We'll have to bring you back for another fight.
In a year from now, we'll see how things are looking.
I really want him to do well. But I'm, you are a fan of distribution of power. Mm-hmm. I'm a fan of institutions. Meaning that I like things to remain the same as long, and then follow, if we're going to make some changes, follow some predetermined path to make changes. My concern with Warsh right now is he's making changes under the radar that nobody can is understanding. Now, I hope he comes out and kind of lays out those
changes. Is it just less meetings and less forward guidance? Those are the changes that worry you.
To me, those are big changes for the market, and they did not follow a path where we included people in the decision making, right?
Yeah, and my big thing is like organic conditions.
Yes.
I don't think that these 2 less meetings, and because these Fed predictions, they make the decision, but it's a group thing.
It is a group thing.
And usually, correct me if I'm wrong, but unless of times of like really intense turmoil, I'm pretty sure that you know what their predictions are going to be.
Yes.
It's not too hard to predict. So I don't think that information is as crucial as you think it is. But I think there needs to be more information organically that isn't just the Fed's information.
And Jack, I think it hasn't been crucial because we've had the information. Yeah. We'll see what happens in the next.
Yeah. Yeah. I mean, maybe. Yeah.
I think our relationship with the United States Central Bank is changing. And that change in the short run is going to have some frictions. I think we'll eventually come to an understanding.
Yeah.
Right now, I don't have that understanding. And that's where my frustration is.
So you're just experiencing the friction.
I am experiencing friction that I don't mind experiencing friction. I mind experiencing friction that I don't think is necessary.
Fair enough.
Yeah. All right. So Warsh is out of our way. What's on your list? What else happened in the economy this week?
Let's talk numbers.
All right.
Economists love numbers, right?
We love data. Speaking of data.
Yeah, speaking of information. Inflation.
Actually, before we go on, if you have feelings about Warsh, leave them in the comments. Do you agree with Jack or do you agree with me? No, my feelings will not be hurt, but we really want to hear from you all because we're obviously extremely passionate. And since Jack believes in markets, let's hear from the markets. What do you all think?
I agree. Let's hear it.
All right, Jack, give me the data.
All right. So inflation sits at 3.5%.
Yes.
And unemployment at 4.2%.
Yes.
So with the decision to keep rates steady,
yes,
you think that is the right decision right now?
Yeah, we talked about that previously. I mean, the biggest issue, the only reason we would increase interest rates, because that seems to be the conversation.
Yeah.
When we're talking about changing interest rates, the conversation's always been about increasing them. I don't think that solves the problem because the reason inflation is high is not because of excess demand. Mm-hmm. It goes back to oil prices. Increasing interest rates will just reduce or increase our cost of capital over here, and it's not going to eliminate the oil prices or reduce oil prices. So, if I'm Warsh and I'm thinking about making changes, this is an optimal time to make a change because by all means, the numbers in the U.S. economy minus the war situation, the economy seems to be strong. It depends on who you ask. But from the data that we see, I mean, unemployment is relatively low.
Yep.
Inflation is higher because of the oil prices.
Yep.
GDP growth just came out at 1.5%. That's the first sign that the United States is real GDP growth is slower than it was last quarter, which was 2.1. But otherwise, we don't have financial crises. We don't have a burning housing market.
It's true.
So the economy looks good. Once again, it's like if you looked at the GDP data, most of that was driven by consumer spending.
Yeah, it was.
My biggest concern is where's the consumer getting all this money from? Because they've been lifting this economy.
They're saving less, like you said.
They are saving less. You are correct. But the United States economy has been on the backs of consumers for at least the past 2 to 3 years.
Oh, yeah, for sure.
And my concern is how long or how sustainable is that? Now, I've been forecasting a consumer recession for the past 3 years. It hasn't happened, so don't listen to me. But I just don't understand how the consumer continues to spend. And I don't know about you, but when you ask people, how's the economy treating you? And they're like, it's horrible.
Yeah, but then they go and buy that thing off Amazon or that.
People are spending at the retail, at the cashier. I just don't understand how long it continues. Now, one thing in the GDP data that came out that was eye-opening for me, actually two things. One is the federal spending had declined drastically. So that raised a little bit of concern for me. The other thing that was really eye-opening was nominal GDP grew at 7.9%. But when you stripped out inflation, it was only 1.5%. Yeah. So how much of our economy is being hurt by those inflation numbers?
Well, I think the number one goal of the Fed should be to curb inflation.
But I don't know what levers they have. I mean, if energy,
they can't do anything. Like
they cannot.
The only way to cut the oil impact on inflation is to end the war.
Yeah.
Or open straight.
Yeah.
Cleanly,
open the strait.
Cleanly.
Yeah.
Without, another bomb dropping.
Yeah. So how's the economy treating you? We talked about this earlier in the summer. You were still living off the high of being a graduate of school.
Yeah.
As you're going into the law degree, what are some concerns on Jack's mind?
Honestly, first year law school being school in general has become more expensive.
Yeah.
And law school is no no easy,
no difference,
no easy task on the wallet.
Yeah.
The bigger issue here, though, is that my whole thing is I'm not working my first year of law school.
Yeah.
And I only took out the loans I needed to pay for law school. So my goal is to live off what I have. And my biggest fear is, the essentials, gas, food, and someone who's trying to put on weight. I eat a lot of food. So that's my biggest issue. And I'm not overly skeptical or worried.
Yeah.
But I understand why people are.
Yeah.
I mean, beef prices are rising. Meat prices in general are rising.
I haven't bought beef in like 6 months.
I buy ground beef every week. So
yeah.
I know.
I've moved strictly to chicken.
Yeah, but beef just tastes so much better.
It does.
It just tastes so much better.
It does. So the quality of my life has diminished. So this is really important because we always talk about aggregate data. And I think aggregate data is really important. But we need to start thinking about different segments of the economy.
Yeah.
And the thing that concerns me a lot today is my students, right? My students are having to work so many hours, and that means they can't spend more time on school, but they're also extremely anxious about the state of the economy, which means we're seeing a lot of people defer going to college, and we're seeing it more in the graduate programs.
Because of expenses.
It's expenses and uncertainty.
Yeah, for sure. And college as a whole has got more expensive, a lot more expensive over the past 40 years.
Yeah.
So if someone's already skeptical about, not having enough money, they're not going to take the risk like you say they should.
Yeah.
If they're worried about the economy and the expenses.
Yeah. I have a question for you. I don't know if you saw SpaceX came out with their revenue yesterday.
No, I didn't. What is it?
So they beat expectations on the revenue side, and then they're still making a loss, obviously, but they beat expectations, and I don't know what that means for the economy and where did this revenue come from, but it's something that, like, I was scrolling through, I was like, whoa, why did SpaceX beat expectations? And I don't have an answer to that. We'll have to look it up, but if you know what's happening with SpaceX, or if you have some skepticism around the data, leave a comment, because Elon is going on a tour right now saying that if you bought SpaceX stocks, you made the right decision. But if you look at Ed Elson and Scott Galloway, they are not fans of SpaceX.
Yeah, I mean, I'm going to take a wild guess and say that SpaceX probably has government contracts that are boosting them.
Yeah.
I mean,
That's probably the case. What else is on your...
The yen.
Yes.
Japan.
Yes, the yen. What happened with the yen?
Well, I have a funny story first. This is something that we talked about, months ago?
This was back when we were doing the virtual.
Yeah, it was like 3 a.m. I said the next day I walked into Dr. A's. Was it your last lecture that I attended?
Yes.
Was that what that was? Yeah. And I walk in there after class and I'm like, did you see what's going on in Japan and the yen's decline? And I said, this could really hurt the US.
Yeah.
And so we talked about that, but guess what just happened?
Yeah. So yen depreciated in value drastically last week. And the reason that it dropped drastically, if you haven't really caught up, let me give you a little bit of background on what happened in the world economy. Because of the war on Iran and oil prices, Japan has, whenever they buy oil, which is in US dollars, they have to exchange yens for dollars. That means they were selling yen to buy dollars, making the yen depreciate.
Yep.
So as the yen depreciates, there are massive issues for the U.S. economy, which people didn't see the connection. But to bring back the value of the yen, what Japan was doing was selling U.S. treasuries, because Japan is the biggest asset owner of U.S. treasuries.
1.1 trillion.
So they liquidate these U.S. treasuries. They're selling them in the market. What happens to interest rates? They go up.
Yep.
And you, in the United States, I'm looking at Claire and Ahmad over here who are sitting across from me. That's what you care about, because the average American really wants lower interest rates.
Yeah.
Not only that, so does President Trump, who has a whole campaign on affordability and housing affordability. So now the U.S. has to intervene.
Yeah.
And what do?
$5 to $10 billion.
$5 to $10 billion purchase of yen to prop up the yen price.
Yep.
So this is another reason why it's so important for you to be globally aware. And that's what I try to instill in my students. It's really nice. We live in a fantastic Highland Heights, Northern Kentucky / Cincinnati area, but you have to be aware of what's happening in the world.
Oh, yeah.
Because what happened in Japan hit your mortgages over here, and now is causing the government to have to liquidate some of their cash and their assets to support a different economy.
Yeah, in a time where we're already experiencing outside pressures. Well, I guess inside pressures that we caused, but
the geopolitical economic environment is an interesting one these days.
Yeah.
Jack, in 6 months, if you had to guess, how would you describe the state of the economy?
State of the economy, I would say, I think things are going to they're going to stagnate.
Yeah.
I don't see major growth, especially with what you said about forward guidance and people being skeptical. Yeah. I think it's the right deal, but like you said, friction.
Yeah.
There's going to be friction and there's going to be turmoil that we just have to work through.
Yeah. If I could summarize my position on economics, information or certainty is the biggest driver of business decisions. When people cannot forecast what will happen in the future, they hold back. Right. And if they don't hold back, we'll see the people with a higher risk appetite gamble a little bit more. So I guess that would be, what would your takeaway of today's episode be?
We got to wait and see.
Got to wait and see.
That's what I got. Certainty.
And most importantly, we got to wish Jack a happy law school. Thanks for everything you've done for Decode Econ. It's been fun having you on the podcast and you encouraging us to try new things. So hopefully in 3 years, you'll come back here as a law student, as a graduate of law school and give us some law advice. Hopefully we won't need it.
Yeah, hopefully you don't need it. But
yes. All right. So thank you all for listening in. Once again, please leave a comment. Share this conversation with somebody that would benefit. We are getting ready for the academic year. So we are looking for more econ students and their faculty members to join us as part of our community. So if you are interested in being a guest and you have some opinions on the state of the economy, shoot us a DM. Let's get to meet you. See you all on the next episode of the Decode Econ podcast.